Hey guys, it's November 14th, and this week I'm in Bradenton, Florida. And this is a crazy day in the markets, just like every day has been. I will be previewing, because it is a little bit slower today, host Marriott and also Alibaba Group. And, really we're more or less out of earnings, but we are into retail earnings this week. It is very heavy retail earnings. I'm going to share my screen. Past performance is not indicative of future returns. And we always start with kind of the setup for the day, just in case you're watching this via YouTube much later. We can see that this thing has been more or less flat all day, and that really is because the only big company that reported today was Tyson Foods. It wasn't the worst report in my opinion, and that's really because last year they were up against such a tough comp on cattle. The margins were just fantastic for them last year. This year they didn't quite have the same operating push through on cattle, even though revenue was up, but operating income looked terrible in contrast. But as you can see, you've got kind of this really funky market dancing around flat all day. And then you've got crude oil, which keeps correcting. I have no idea why people think it's going to be okay through the winter. It may be because the China opening, they're thinking is somehow going to mean that China is going to help with the coal situation and otherwise. But I just don't think so. It's not in a place where China, who is a net taker of oil, is going to want to be like, oh, let me just sell off all my energy reserves. They're not America. That's not how they roll. Anyway, let's look at FinViz. As you can see here, you've got kind of a very funky result going on, especially with some of the China news that's coming out where, we've got Biden and Xi speaking to each other finally at last in terms that aren't just very caustic now that we're through some of the election stuff. We had actually telegraphed that a long time ago, by the way, just FYI. So, it's already starting to happen. And that's part of the reason why you're getting this massive rally in certain names that particularly have China exposure, not the least of which is Tesla, which has been up, down, up again, down again. You know what I mean? It's been, but a lot of that has to do with Elon. You can see our episodes on how we feel about that. I do think that this is a buying opportunity for Tesla for a while. You might as well go ahead and take this near-term concern that people have on his ability and leadership to go ahead and get some exposure if you didn't fill up on Tesla yourself. Okay. Now let's get into the stuff that I've prepared for today. We do have PPI coming out tomorrow. That could be a zinger. So you do want to be really careful. If you're buying stuff, nibble on it. Don't go too aggressive because, retail could really throw things off pretty aggressively. And I have a feeling it's going to be super duper mixed. Who's reporting? We've got Walmart and Home Depot. Now we know that housing has been weird, but Sherwin-Williams actually reported a really, really good quarter, and so too did the home builders. And that's really a function of the fact that raw material costs came down and they got the pricing through. And then when it all netted out, it was fine, strangely enough. Now, can they keep it for forward guidance? That's a really tough call. That is a really tough call. Sherwin-Williams certainly had a lot to say about how the way that people have changed their housing arrangements post-COVID, work from home, et cetera. That trend is still flushing on through. And the pro market is still very much so finding work. Now, that doesn't really sit with different areas. I have some friends that are in various states, and I think it's really regionally mixed as relates to what the pros are able to achieve in the way of business right now. I'm here in sunny Florida, which absolutely has taken a lot of snowbirds into permanent residence here. Population growth has been crazy. So yeah, here in Florida, contractors are still doing, it's slowed, but contractors are still finding work. But, in California, other states where, people are basically jettisoning from, is a different animal. So we will know once and for all from Home Depot and then subsequently Lowe's what it actually looks like pro versus do-it-yourselfers. And then so on and so forth. I would say that Walmart scares me. I'm not going to touch any of these retailers because Walmart, if you look at the valuation, it is really poised. I mean, it's got to actually report this quarter. And, it's got some things that it was integrating and taking care of. Fair point. And definitely when I'm going to the parking lots, I went shopping this weekend with my very dear friend down here. They're full up. So people are absolutely shopping. But, is that just what I'm seeing in Florida, or is that what I'm seeing across the United States? We'll have to see. CPI definitely came out stronger than I would have expected. So, at least on some of these areas, general stores, et cetera. So anyway, we're going to watch it tomorrow. We're going to see what's going on. But as you can see, 10 cent one of the largest, I think the largest market cap Chinese company, but it's always tough because share classes are weird in China. And nonetheless, one of the biggest companies is going to report on Wednesday. I need to double check that NVIDIA is actually reporting after the close on Wednesday as well. That's going to tell us a lot about what's going on in China. And then you've got Weibo and Baba. Ooh, should have written. Oh yeah, Baba reporting on November 17th. Are the numbers going to be good coming out of China? Probably not, because it is backwards looking. And it's not like these companies love to give massive forward guidance. It's just not their way. They don't act like we do here in the US yet in the way that they think about those types of things. And they're certainly not going to be too aggressive unless, and if they are, then that's coming from not the company, but, because all these companies, it's not a democratic nation. All right. So anyways, we'll be looking for that. And I'm sure any analyst that's allowed to ask questions on the call will be sniffing out best they can in the right words, things that the entire street is trying to figure out as relates to the Chinese nation. Now, I want to really highlight coming up here as we move out of earnings season, as I get through more earnings reports, probably in the next 2 weeks. Last year, I did a Christmas list of companies at different price points. If you were trying to find names to give your kids because you wanted to give them a mixture of financial instruments and like other types of, physical goods. I mean, you got to get toys for your kids, right? But I did those Christmas lists last year, and I think they were well received. So I am going to start prepping Christmas lists coming up here as we enter the holiday gift giving season. One that will definitely be on that list is one that one of the Christmas list companies that's definitely going to be on there is Host Hotels and Resorts, ticker HST. And what you have to know about Host is that it was spun out of Host Marriott when all of the hotel companies went to asset light. So even though it seems like when you're buying Hilton and Marriott, you're actually buying the physical hotels themselves, actually that's not the case. Most of them have been franchised out. And so even though both Marriott and Hilton do still own physical structures, not nearly do they own the same hotels that they used to own. Well, ticker HST Host is one of the only investment grade rated hotel REITs, period. And what's really fascinating about them is what that implies that they can do in this environment that other companies cannot do. And this most recent announcement that they have with this purchase of the Four Seasons in Jackson, Wyoming, I've been to that Four Seasons. That was a good purchase. And we're going to talk about that. I want to show you additionally, that this particular group is indicating everything that I've talked about. Travel is exceptionally strong. And to the extent that a lot of the hotels and then Expedia Booking and others have gotten clobbered, this is a buying opportunity. And it's just a function of the weird oddities and navigating that as you purchase a slug for yourself for the long term. But these are going to be screaming wonderful purchases for the holiday season. Okay, let me share back my screen so I can show you what happened on the quarter. They reported, I think still during the red period, because we've had such a bouncy marketplace. This is Host, okay? Their revenue, this column is the percentage change from year over year. And this is since 2019, because remember, all of the travel guys still report relative to 2019. So you can see how much they've improved and have gone back to previous times. Again, Host owns your luxury resorts, okay? They don't own any low-end anything. And they have said since the very beginning of COVID, luxury recovers faster than everything else in travel. And they have been right. So almost 41% top line growth, revenue growth, and just kissing what they were doing in 2019. I want to tell you why they didn't make it even with 2019 or even do a little better. And that just has to do with the fact that they own a hotel in Naples. Okay. And they had some people canceled. Some people just rejiggered from Naples to Orlando. They also owned Don Cesar in St. Pete. So of course, when the hurricane was coming through, a lot of bookings got canceled for that hotel as well. So that is the reason why this number isn't higher. There wasn't a question if it's going to be low or whatever. So just know that. So RevPAR, if you're unfamiliar with how to think about the hotel groups and how to think about what's going on there, RevPAR is an important jargon word for you to understand. What they do is they try to make it so you can see what the revenue per room is and also per total hotel nights coming out sort of thing. And so all the RevPAR's up 48.7%, which means they're also getting pricing power on the rooms themselves. And they were getting in 2021 across the entire hotel franchise that they had pulled out of Marriott, $135 per night on a RevPAR basis, which means they had a lot of empty nights. Okay, that's what it really means. It doesn't mean they're actually giving you a hotel room for $135. And then that's come up 42%. So now they're at 192. Okay, net income negative last year, positive this year. Net income isn't the best metric for anything real estate related. You're going to want to look at EBITDA, RE. The RE is just another adjustment that they make for real estate companies on, you got to take into consideration sale of assets, renovations, CapEx, all that stuff, because there's a lot of non-cash that goes in here in a strange way. Anyways, that's up even higher. So they are generating so much cash now because this is an economy of scale situation. And one of the concerns that people had was because now occupancy rates are up a lot, are you actually charging enough to compensate for the cleaning? And their response, it was one of the layup questions that the analysts sometimes ask management so that people can be reminded of the business model. And they're like, yeah, we own luxury hotels, friends. People don't have a problem with us raising prices so that we can clean them properly. So that's really what it is. Additionally, sometimes the other thing that transitions whenever you're going into REIT land, you're not going to look at it from earnings per share because of all the other stuff, the DNA, et cetera. You got to look at it at FFO, funds from operations. That's what will take out all of that stuff. And you can see funds from operations, which is the equivalent of EPS for these companies, up 90%. Now, let's see. Oh, yeah. I just want you to kind of see how cheap it is. Now, there's not, this is what if you pull it off of Yahoo Finance, and it's a really tough way to do it. You can kind of look at it a couple different ways, but this is the 9-month ending, and realize the next 3 months are holiday season. So even though they did a pretty great quarter, this last quarter, 38 cents versus 20 cents year over year, just realize hotel rooms did not go down in price for Christmas, okay, and Thanksgiving. Additionally, this is only, most of their stuff is all US. So you're not getting a lot of international crazy stuff that you're gonna have to adjust for mentally and understanding the story. So these are all high-end fancy hotels going into the winter months. And yeah, so you can kind of see what that's all about. If you just added this back into this, you would see that when you take the market cap, they do have debt. So you have to take enterprise value. This thing is just cheap. There's no other way to say it. At 10 times EBITDA, this is cheap. Just to give you a sense for it, 10 times EBITDA is not what you pay for a high-end real estate property. It's closer to 16 times, by the way. So just realize it's unbelievable. And yeah, so this is the last slide I have on it, but I do want to talk to you about the thing that was the most exciting to me about this company. And that had to do with their purchase of the Four Seasons in Jackson Hole. They bought it for about 4 or 5 times EBITDA. Now, if you guys have not had a chance to go to Jackson, to Wyoming to see like what Jackson Hole's all about, this is only luxury. It's a really small ski village. And then, the Four Seasons is either, I mean, it is like one of the top appraised ski places. Everybody's going to end up there after they ski. Just there's only a handful of places that you can even go because it's such a tiny ski village. And the Four Season books out. Okay, they fully renovated it. So the reason they were able to get it at 4 times or what have you, this is the most important thing, is because they're investment grade and they did an all cash offer for it. No one else can do that. So their plan of attack, and this would be the one thing that I think would be a positive, but the street may do stupid things or the data feeds may do stupid things. They're going to keep buying luxury properties that need financing as interest rates have risen because they can. That's really as simple as that. The Four Seasons on top of it, 4 times even from last year, I think is what they were saying in the call, 5 times, maybe something like that. But let's even say I'm wrong, it's 6 or 7 times, right? Realize that they did that. And because of the domestic flights and because of what's going on right now in America, they've renovated that airport to accept more direct flights throughout the United States, 1. And 2, and even more interesting, is that they were doing renovations all last year. So this is actually a fairly well renovated property. So you're not gonna have to put a lot of CapEx into it. I just think they're going to make money. I think the average hotel room night that they suggested on the call had happened last year was around $900 a night. So just know that there are some really intriguing things going on in the dynamic of hotels that I think this thing is going to be a winner, winner, chicken dinner for next year, provided the wheels don't fall off of the entire world. Now that President Biden and Xi seem to be making good with each other, I think there's a little bit of a better view. And I think my argument still stands as relates to hotels. Okay, now I want to go through Alibaba. Let me share my screen again. Okay, Alibaba, here's the thing. That I have been, let me take this off. I've been really bullish Alibaba, but I've been very clear that it's a little bit on the binary here. Either we make peace with China or we do not. If we do, Alibaba's undervalued. Now, I want to be really clear. When they report, China's GDP has been weak. Not a darn person out there has been confused that during this period of the elections, this is historical reporting, it's been weak. All right. And I've told you that after he basically got reconfirmed, that he would then, I didn't think that there was a very big probability that he would continue with the tightness that we've seen in or that he would continue hurting his own economy for any reason, but I still say that the timing and the interesting thing to see is what will the Communist Party do over the next 3 months as we move into the tail end of it into Chinese New Year's, because Chinese New Year's is just a big period of time for spending. It's a big period of time for mobility. And those things, if you've got an unvaccinated population, could be a problem. So now let's look at where Baba left off, just so that if you're watching and you can kind of figure out where you want to buy it. Okay, here is the earnings report that we were seeing here. Okay, so it was 2000. This is the March year end. Okay, so they've had 2 quarters for next year for 2023 already. And then those 2 quarters don't happen to be the strongest quarters. This next quarter, you've got 11/11, which just happened. It's a big sales day. And one of the biggest sales day, quite frankly. I think they call it Singles Day. It's very depressing that way. And then you've got Chinese New Year's and Christmas, because they take every opportunity to sell you stuff. And you can kind of see that it is up against a little bit tough comps, because last year, as bad as it wasn't that bad. But you can kind of see if you look at so you're going to have to use RMB, that there were a lot of additional cost of revenues that were going on because of all the different things that were going on. And so you do have the ability, as each quarter passes, for this thing to look like a hugely growing entity. And so, if it's not this quarter, it will be the subsequent quarter, provided the wheels don't fall off, period. And the news reporting today seems to suggest that things are kind of moving in the right direction. When we look at, when we look at Baba, shoot, I didn't pull it up here. Yeah, here we go. When we look at Baba, you can see that it's only like thus far in the June period, they were still doing about 30% of 2021 sales, just so you can get a sense for how much this thing slowed down. I'm concerned that when they report, it will also slow down. It just really has to do with how the rest of the market's going to react to that. Now, the more important thing is how much has the stock gotten clobbered since June? And you can take a look at that chart and know that it's more than 30%. So it may be the case that either estimates are lowered or people are over shorting all the Chinese stocks, and this thing will be springboard loaded. This, though, just so you know, whereas usually everybody's like, oh, I wonder why it's terrible. Is there a business model issue at down 30%? There isn't. There was a guy trying to become the leader of China for the rest of his life. That was what was happening there. And now he is that. And I suspect we can move on. Last thing I really want to show you as relates to Baba is where the US dollar has moved to relative to the renminbi. One other thing I want to show you here is you can kind of see Chinese commerce is the bulk. It's only about, it's less than 10% international commerce for Alibaba. That said, some of this international, some of this is export, okay? And Cainiao, which is the logistics stuff, is mostly domestic, but still is a big piece of exports. These two pieces, the export pieces, could be significantly larger in 2023, if you will. Okay, so that being the case, what's happened between the dollar and the renminbi? Well, the thing got really weak, okay? $1 gave you 7 renminbi, yuan, Chinese yuan, whatever you guys, I'm old school. I'm always going to call it the renminbi. And you can see that has changed dramatically. So there's a lot of folks that are thinking, no, this is going to open back up. When it opens back up, it has historically sat between $6.30. I mean, it creeps up every now and again. but not really. So let me pull the chart farther back and you can kind of see it. The last time it was in the 7 level, as high as it got to, was 2008. Okay. So this is about as crazy as the renminbi has been to the US dollar. Um, that really also indicates a certain sort of dynamic that we should expect to see as relates to how we interpret the earnings of Alibaba. And the reason I say that is because they do the currency translation for us, but they're not doing any kind of currency translation for themselves because, quite frankly, they're a Chinese company. So they're going to report it in Chinese dollars. And with that, I will stop share. Hopefully that made sense. How's it going, David? The sun like literally has come out right on top of me. So
Wow, it's very nice. Okay, May, that the host now, are they buying? Are, I guess I'm asking, how did they get? Are they ex Marriott, or are they a
Yes.
spinoff of
Yeah,
Marriott?
so a few years back, all the hotels decided they would go asset light, is what they call it.
Right.
So if you look at the earnings report for Host or excuse me, for Marriott or for Hilton, you'll see this gigantic line item that's called franchise revenue. Well, all of the top ones that are the aspirational hotels, if you will, those mostly went to Host. So that's exactly right what you're saying.
Okay, and so that Four Seasons in Jackson Hole, that's their first.
That's the first one that they have. I mean, Jackson Hole, I feel like
Yeah.
you all around that area. So there's just not that many hotels there, period. And so that's their first. So there wouldn't be there's no Marriott in Jackson Hole. I don't know if you got to go there recently to recall all of what's there, but it's mostly those boutiques. I don't think there's another chain there besides that Four Seasons sitting there. There might be one European one that's there, but I'm not 100% sure. I was mostly, trying not to fall off the mountain. And then I was at that Four Seasons having a drink afterwards, being excited I didn't fall off the mountain because I'm not a great skier.
Yeah, I mean that's a very, very popular resort.
So popular. And it's only the wealthy that
So
go.
where else do they own?
So
You
here in
know,
Florida, I don't know if you know Florida that well. It's funny because they'll call them out, and because they're really calling out all the places that I know and love. So I think they own the break. No, Breakers is a Hilton Hotel. Sorry. So they own Don Caesar's in St. Pete. They own I think it's like either the Ritz or I think it's a Ritz that's down in Naples. I'm not 100% sure. They own I think it's I think it's the Four Season or Ritz Carlton that's right on top of Disney World. And then I mean, I'll get you a full list when I do the full video on it. But
so
yeah.
but they leave it stays as a Four Seasons, right?
Oh yeah, no, 100%.
Okay.
Yeah, they're not going to rebrand anything. All they're going to do is just enjoy the fact that they have a cheaper cost of capital, own that thing. There's not a lot of renovations because so many renovations have gone into that particular property in the last whatever period of time, they're going to just glide into ski season like champs. You know what I mean?
So Four Seasons turns into a franchisee.
There you go.
Okay.
Yeah.
Yeah.
And they were talking about the fact that these deals don't come up like other deals, because they do have relationships with some of some of the other properties and stuff. Just given their history, so to speak.
Yeah.
So it's not like Hilton gets a shot at buying Four Seasons, so if we're going to say it that way. I mean, they might get a shot. I shouldn't say it that way because the hotel world is the hotel world. It's whoever's got the money at the right price. But I mean, I think Host will get first look versus other folks. Additionally, you don't have they are the largest cap hotel REIT that is AAA rated. So it's both things, right?
Right.
Right, not AAA rated, investment grade. Oh, what's wrong with me today? They're the largest market cap investment grade hotel REIT. Sorry. The thing that is intriguing to me about this company, if I were to be fair about it, is I still think that people are given way too much credit to Europe. I've been very clear that I think America is in fantastic shape and that there was a better than 50% probability that we come out of this whole crazy situation looking clean as a whistle while Europe takes it on the chin. If Europe takes it on the chin, they're going to have a few problemos, and some of those hotels may come up as well. So if it's not a big history for this company of being overseas, but it could get really interesting depending on what happens in Europe.
Yeah, I really like this idea. Okay.
Yeah. Anything else? I mean, this week it's as good a guess as anyone else. It's going to be a fun week with all these retailers reporting.
Yeah, PPI tomorrow, but I mean, the market wants to go higher. It really does.
Like that too. I agree with you. Yeah.
Christmas rally.
Yeah, I think it's gonna be a Christmas rally. All right. Well, I will see you tomorrow. Everybody take care. Try to not get the flu because I'm finally, I think, turning the corner here.
I don't think you're contagious. Thank you, May.
No, it's definitely an out of the internet. Take care, guys. Bye.